Rohr here with an early global view on Monday, November 3rd, 2014. It is currently 6:45 a.m. U.S. Central Time. And of course, we're back to a global view because of the significant impact of the surprise BOJ extension of their quantitative easing program on Friday. But we also asked the question, is this really globally positive? We'll be getting back to that later. And so what does all this mean to the markets? For right now, the S&P future is off $4, giving back just a little bit of the major gap up and push back up. And for all everyone talked about the new all-time highs in the U.S., that was true of the Dow. But in fact, we stalled on the S&P right against the previous high. We had that mid-September push up to 213.5 lead contract right before the September contract expired, 212.5 in the December contract, and that's as well as it did. So for now, this doesn't look bad by any means, especially with the gap up Friday, where you've got a low here at 2003 that re-gapped an old gap down from later on in September, from right around the 2004 level, that gap below 199. And here this gap now is all the way from 2003 down to Thursday's close at 1988.5, which again is a buffer before you even get to the old 1985 high from July, and the bigger supports we had isolated previous down around 1975 to 78, the heavier congestion. So there's a lot of support below this market, but the question is whether it has just come back to maybe leave a big double top, and for the bulls, we want to see the market get out above this 2013 area, and that's very important as well, and important to the bears, I might add, because above that, because there has been such a sizable correction, out of mid-September into the terrible mid-October debacle on Ebola and weak data, etc., all the way back down to the low 1800 area, the oscillator and topping line on the weekly chart has been moving up to where the higher resistance above 2013, you don't get much until 2045 to 55. So it's going to be very important to see where this market gets out and stays out above 2013. For right now, another bullish factor, though, is that even after it dipped just a bit below its upper runaway band on the weakness into and after the FOMC on Wednesday, the lower overnight trading into Thursday really didn't keep the market down overall. And once it started pushing up, it was quickly on Thursday by mid-morning back above that upper runaway band, and that reinforced the bullish tendencies once again. And as you can see, we are still out above this upper runaway band. So it's going to take some sustained weakness here to start to change the tone at all, and our instincts are any initial dips are going to be well bought on the current psychology. And that pretty much does it for the short-term view of the S&P 500.